afternoon. Welcome to Options Tender. It is 9/7/21, Tuesday after Labor Day. Thanks for joining us here. If you're new, go down to that bottom right-hand corner, hit the Options Tender logo, and subscribe. What we're going to do today is just give us a slight update from the weekend video. We did actually have a sell signal, so we pressed on some of our puts, and now we're just waiting for some market action to happen. So let's go ahead and update. Here we go. SPX on the daily trend is our friend. We are looking for this pattern to end. We have a ending diagonal, wave 1, 2, 3, 4, 5. So we had 3 waves up, 3 waves down, 3 waves up, 3 waves down, and we're looking at this possibly being the end of the 3 waves to the upside. Okay, so what we have going on here, if we cross it over on the MACD, that would be a nice bearish divergence, bear crossover. Hasn't done it yet. We don't see it on a histogram, no red. So what do I mean when I say that there is a sell signal? Let's go down to the 65-minute chart. So like we talked about on the weekend update, we're going to go right down to this last leg of this ending diagonal. So we have our A, B, C possibly over, and now we're working on a possible 1, 2, 1, 2. So we were talking about this rising pivot. That was our first initial sell signal. So we broke down underneath there, and now we're back testing that area. So this will invalidate the count if we two things. So if we come back over this rising pivot, then I'm going to lighten up on my trade. If we actually break above this level here, then we have our count wrong, and we're still going to be bullish. We're going to look for some hedges. Right now, we are not hedged. We're holding this point, and should just be a back test. Looks like some sort of bear flag. Let's go down to the 5-minute chart to confirm that. So on this 5-minute chart, you have this wiggly squiggly, this A, B, 1, 2, 3, 4, 5 possibly. This might it may be complete here, or we may go up just a little bit more. You see all these touches. It's such an important pivot. Touch here, 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 fake breakdown here, and then broke through cleanly right there. So we're looking at this being a corrective move to the upside. Looks like this is impulsive down for a 1, 2, 3, 4, 5, and then a correction up, and then another impulsive move down for another 1, 2 possible. And so we're going to hold these puts overnight, so long as we do not close over the this rising pivot here. So we're watching real closely today. We're definitely putting the microscope on this market, and you know, keeping an eye on this is a very, very important point in the market. So let's go over to the VIX, just check it out from a different point of view. Actually, you know what? Yeah, we'll do the VIX first. So the VIX started to break out from the wedge with all these moving averages, moving sideways, getting real tight in there, rejected off there initially. We'll see what happens tomorrow. The best thing for bears would be for the market to get down overnight to get through all these resistances, moving averages. You have a big resistance here around 20. So a lot of confluence here in this area. Let's go over to the SPY on the 65-minute. We don't usually do this, but I want to just give you a perspective of what I'm looking at, different points of view. So from this point of view, we have our gap. So we closed the gap earlier in the week, and now we're holding on this gap here. We have our expected move coinciding with another gap. There's gaps all over the place, coinciding with this gap here, the bottom of the gap. So we're looking at least targeting the options expected move. If this is going to start to get out of control with volatility rising, then we may break through the expected move to close some more gaps. But for now, gaps are used as support until they close. You know, they may flush through. That'd be the best thing for the bears. Or like I said, even just gap under it, leave an island gap here would be very bearish. So this one, we have a gap right above. That was from today where we broke down, and we're kind of retesting that area as well. So at this point, this just looks like a back test. It does not look bullish. It does not look like we're going for all-time highs again. But this market's been resilient. We're here at the 0 line, the MACD. We're trying to cross back over the 50 line on the RSI. So, you know, price wants to go up, but we'll see what happens and go from there. So one more look on ES. This is where I use my day trading platform. So we have all of these supports and resistances that give us a different point of view of what's happening on a micro level. So we're still on the 65-minute chart, but I just want to show you that same back test. We're coming right to the point of control on the 30-minute chart. This is the point of control, or also known as the volume shelf. So there's a lot of things happening here. Broke down through it, come back to back test it, and I would presume from this point that we'd break down from here. So that's it. That's all I want to show you guys on the update. For Patreon, stick around. We're going to show our in-depth trade on Apple that we just jumped into, and a couple of other things with the rest of the market. So thanks for joining us. If you want to join our Patreon, it's only $5 for the first tier, $10 for the second with trade alert. So we have a trade alert on today that we're going to officially announce. So okay, thanks for joining us.